Okay, let's look at the data. Right now, we're seeing this classic divergence playing out in the market. You've got the public narrative just saturated with fear. But then you look at the institutional flows, and they're painting a completely different picture. So our job is to separate the noise from the signal.
In this right here is the noise. I mean, headlines like this one from MarketWatch, they're designed to shape retail sentiment, right? They're screaming that the AI trade is over, that market leaders are on the ropes. And look, it's a powerful narrative. You can even think of it as a sentiment data point. But what does the actual market data say? Let's find out.
Okay, here's the signal. The Dow Jones, it's up over 1%. And we're not just talking about a couple of stocks pulling the weight here. No, this is a broad-based move across the industrial sector. This is our very first clue that capital isn't just running for the exits in a panic.
And it continues. Let's look at the S&P 500, also up almost a full percent. So that confirms it, right? The strength is broad. It's across the 500 biggest U.S. companies. That gap, that divergence between the scary story and what's actually happening, it's getting wider and wider.
But this is the real kicker. The Russell 2000, which is our best read on broad market health, is up nearly 3%. That is a textbook risk-on signal. It's telling us that the big money, the institutional capital, isn't just sitting back defending mega caps. Nope, it's actively hunting for growth in smaller, more speculative companies.
So there you have it, a crystal clear divergence. The story is bearish, but the data is screaming bullish. Now, for a data-driven analyst, this is exactly where things get interesting. This is a market anomaly, and it absolutely demands a closer look.
All right, so to really get what's going on, we've got to learn to filter out all that noise and lock onto the signal. So let's break down how we do that. We're going to dive into institutional flows and the market structure.
And this is the term you need to know: market anomaly. It's exactly what it sounds like. It's any situation where the data, the hard numbers, are doing one thing, while the popular story, the narrative, is saying the complete opposite. These anomalies, they're often the very first footprint you see when the informed players, the quote-unquote smart money, are making their move before everyone else has figured it out.
Okay, theory is great, but let's get practical. Let's look at a really specific example of a signal that just cuts right through the noise. We're going to dig into the insider transaction logs, the official Form 4 filings for a company called STAAR Surgical.
Okay, let's really break this down. Look at the data. Over 3 straight days, a 10% owner, Broadwood Partners, just starts buying, and buying big. Day 1, they drop over $8 million. Day 2, nearly $11 million. And then, look at day 3, a massive $22 million. You add that up, that's over $41 million deployed in just 72 hours. This isn't a guess. This isn't speculation. This is a high-conviction institutional bet, plain and simple.
So what are we really seeing here? These are institutional flows. This is the smart money in action. We're talking about huge funds with insane research capabilities putting very real, very significant capital on the line. And the best part? Their actions leave behind a data trail, a set of footprints that we can follow.
So what makes a signal like this so powerful? Well, a few things. First, it's backed by actual cash, not just an opinion on Twitter. Second, the sheer size of the position. We're talking over $40 million. That just screams high conviction. And third, you have to assume it's coming from an informed perspective. Now, we can't know for sure, but conviction this high, it's usually based on some deep research into catalysts that the market hasn't priced in yet. Think about it, positive clinical trial data, a big FDA approval on the horizon, or maybe a massive expansion into a new market. They're betting on something big that's coming.
And this brings us right back to our main point, doesn't it? The public story, the narrative. It's loud, it's noisy, it's emotional. But the institutional data, the actual flow of capital, that's what's decisive. That shows you exactly where the real conviction lies. All right, so the big question is, how do we take this signal and turn it into a tradable idea? It's crucial to remember, a strong signal doesn't mean zero risk. It just shifts the probabilities in your favor. And any professional analyst worth their salt always looks at both sides of the coin, the bull case and the bear case.
So the bull case is pretty clear, right? You've got this massive insider buying that points to some kind of underlying strength. The broader market has momentum pushing it forward, and all that negative sentiment, it could create a kind of coiled spring effect. But you have to look at the bear case too. The negative macro headlines could create major headwinds for the whole sector.
One insider, even a big one, can still be wrong, and sometimes just raw market volatility can blow right over even the best company-specific signal. You have to weigh both of these possibilities.
So here's a framework you can use over and over again. It's simple. First, you identify the contradiction, that gap between the story and the numbers. Second, you dig for the real signal, like these institutional flows we just saw. Third, you got to analyze the why behind that signal. What's the thesis? And finally, and this is non-negotiable, you assess the risk by laying out both the bull and the bear arguments.
And of course, I have to be crystal clear here. This entire analysis is just for educational purposes. The data we've walked through is just a snapshot, and this stuff changes fast, you know? You absolutely have to do your own due diligence before making any kind of financial decision.
So I'll leave you with the question: what contradictions is the market showing you today? Take this framework and start looking for those gaps between the narrative and the numbers, because that's where you're going to find your edge. Stay disciplined, stay liquid.
Hey, by the way, we are tracking these flows in real time. If you want to check out the tools we use, I've put them in the description. We've got some promos for public to get you $20 in free assets, a BTC promo with Webull, and you can look into NVIDIA on Moomoo. All the links are down below. And hey, if you like this deep dive analysis, do us a favor and hit like and subscribe for more.